Good evening. This is the Elliott Wave Big Picture to Little Picture update for gold, silver, and platinum, being recorded on Friday, March the 14th at 6:30 p.m. Pacific Daylight Time. I'm going to begin with gold, and I'm out on the monthly chart, and I've just recolorized a lot of the fibs, adding some additional. In fact, I've added because I believe on my big picture, where gold is trading is within a primary degree, excuse me, a cycle degree, within a cycle degree C wave up. And that cycle degree C wave up will consist of 5 waves of primary degree, of which we've completed waves 1 and 2. So we're in that cycle C wave. It'll have 5 waves of primary degree. 1 and 2 are complete. We're inside primary wave 3, which will consist of 3 waves of intermediate degree, which we have 1 and 2. And inside intermediate wave 3, we're going to get 5 waves of minor degree, of which we have 1 and 2. So in essence, where we are right now is in minor wave 3 of intermediate wave 3 of minor wave 3 of intermediate wave 3 of primary wave 3 of cycle wave C. So we're in what should be the most expansive in terms of expansions within that. So we have a 1, 2, 1, 2, 1, 2, 1, 2. So we're in a minute wave 3 of minor wave 3 of intermediate wave 3 of primary wave 3. So we're in a very expansive and an explosive period. And you can see how it kind of started, and then we still continue to break. And you see how it is now going even more vertical. And that's kind of what we talk about when we're in these types of moves within the precious metals, particularly within gold, that it builds up to an explosive type of a top that'll come in these fifth waves. Now, what's going to produce it? That's going to be coming from the outside, but the pattern itself, it's representative of here. This was in a primary degree fifth wave. Excuse me. So we can follow each one and see where fifth waves kick in. And right now, we're just finishing up thirds. So I'm going to bring it down off of the monthly, but I wanted to show that now what I've added are Fibonacci for the cycle degree, which is the largest degree I count in gold. And so these in the kind of like the brick red are the cycle degree resistance levels on the way up. And then breaking it down, the green is going to be where the Fibonacci resistance levels for primary wave 3 come in. And of course, in turn, the yellow will represent for the intermediate wave 3. The sort of orange goldish color is the minor degree labeling and also Fibonacci. So you'll be able to connect it here to the wave, to the key, and to know where are we. So this is the monthly. This is a big chart. This is 1975. This is 1976, and this is 1980. The high of 1980 has been broken now, and that happened back in 2011. And now we're doing it again in 2025, where on Friday, today, I think it was yesterday actually in Globex, that we broke 3,000. And we have to just look at all these highs. This high was 1923. This high was 800. So we're continuing to make new highs as we progress in this little bit longer term bull market, but it's an ABC, but it's still a bull market in gold. And I believe there's still, from here, there could be substantial gains from here. But again, let's pay attention to the type of move we're going to get into, that as we get up there, it becomes more vertical. And let's start bringing it down. So this is the biggest picture I got. We're in a minute wave three of a minor wave three of an intermediate wave three of a preferred wave three of a cycle C wave. All right, I'm going to bring it down and I'm going to bring it down to the daily. Well, I can't. I got to take it down to the weeklies because this is so big. So here we have the minor wave two, and now we're inside the minor three. So minor wave two began in October of 2022. So like so many of our markets, we have been in a basically a rally phase since 2022. And here again, we are like in our equity markets, we're looking at intermediate thirds to intermediate fourths. And here we are looking at finishing a minor third, excuse me, a minuet third of a minor third. So the minuet third of a minor third. So we still have a minuet five and then a minuet four and then minuet five to finish minor three. And then a minor four and a minor five to finish the intermediate wave three. And an intermediate four and intermediate five to then finish the primary wave three. So there's quite a few levels that we got going on here. And I've got them color coded. Now, again, this is going to roll out. If we think that October of 2022 is when we began the minute wave three. So I'm digging down as deep as I can get to keep it not going up to like the grand supercycle because it's just too much time. So we're keeping it down to at least a cycle degree, which is still years, decade or more. And so here we are in a minuet that is actually now working on its 2 years and 3-4 months, 5-6 months. Because it will, in October of 2025, it'll be 3 years. And I think that is when we could, maybe at the 3-year anniversary of this bull market in gold or this bull phase in gold, that we would reach a top where it might be a larger third wave and we'll get a larger pullback. But the thing to understand is like once we kind of get up to the top of this like minor third, then we do a 4-5 that finishes the intermediate. Then we do a 4-5 that finishes the primary. So you'll see how quickly we'll continue to climb, but they will continue to power, but there won't be, now we're not as far out. So now we're closing in on finishing the whole thing, right? Because right now we're working our way up to a minute wave three. Once that's done, then we got minute four, minute five, and then we've completed the minor wave three. Again, you can walk down that ladder, but understand here in Elliott, it's all building blocks. That's the whole concept. They're building blocks. And gold has been one that really does follow some decent Elliott. So I'm going to continue to bring this down. In fact, all of our precious metals I find right now are following what I think is pretty clean Elliott. If we allow the market to kind of trade and then go back and make revisions to our counts, not major revisions, but revisions to possibly pulling a degree down, and which really puts some finite points together for where we're going right now. For example, again, I'm on the weekly chart and this is the minor two and I'm in a minute wave three going up. And within it, there's minuet wave 1, 2, 3, and 4. We're in minuet 5. So we're getting pretty close to the finishing point of the minute third wave. Right, so now I need to just put up one more. Oops, it's not that. It's going to be this one. Oops, we're going to put that in and put up where we think minute wave 3 will meet some resistance. And it's pretty dang close. So first thing we're going to do is we're going to go out. No, we're not going to add a drawing. We're going to edit this one. And we're going to go to minute. And we're all the way out to here. And I'm going to leave that in, and I'm just going to put in case we get an explosive one, 2.882. Or a little bit more explosive. Let's see what those do. Yeah, that kind of comes up. That works. So we're looking for the completion point of this minute third wave. And we're inside of the minuet. So I'm going to add one more level. And again, this is on a weekly chart, and it's allowing us to do that. So these can be pretty steady. All right, so now we got another one. Wow. See, I love it. When it all starts to come together, we're building a case for where we think this particular sequence is going to finish up. And I'll leave that on there just in case. And this is going to be in that color. And so I'm actually doing this to just give an example. This is how I'm building it out. Because if you move this back out to that monthly, you're going to have way too many levels. You're not going to be able to see anything because you got all these colored lines grouped and pushed together. And that's just showing you the vertical nature of how we're moving, because it'll just be color. So anyway, so here we have the minuet fifth wave, and we can take it down one more. I've got one more in here. And so I've got a nice, pretty strong block of Fibonacci resistance, which leads to the conclusion that, yeah, looks like we will be finishing this five, which will finish this five, which will finish this three, all between, let's say, 3,073. Actually, we start to have it around 3,022, 24. I think I got 31. So we got a real cluster in here where the market will either bounce away or push right through it. But you're almost going to say you start to think there might be order blocks there as well. A lot of algorithms are trading gold. I mean, they go for those for the order blocks, same way they do in our indices. So there should be a lot of things sitting up there which could pull the market back into the next corrective phase. But they're going to be the same way we're doing 1, 2, 1, 2 up. Now we're doing 3, 4, 5, 3, 4, and then 4, 5, and then 4, 5. So we're finishing 3, and then we get a 4 and a 5 that finishes 3. Then we get a 4 and a 5 that finishes the next 3. And then finally we get a 4, 5. Then we're starting to get down to those bigger levels. So what we've now is turned the kind of corner where we're finishing the 3s and doing 4s. 4, 5, 4, 5, 4, 5. So 4, 5, finish 3, 4, 5, finish 3, 4, 5, finish that 3, and then finish the C wave. That's down the road. And so, but I'm now just kind of figuring we're going to nail it down to where I think gold should start to bottom or top as we finish these waves, and then we'll work it down. Because what we're going to be doing is we're finishing the third. Well, what's the fourth going to look like? I run fibs. I start building it coming down. And we'll be looking for an ABC. So as long as that pattern continues, which it is, we're on a weekly and it continues, we can bring it down to a daily 5-year and it will continue. These we got to pull up, because as we pull it down, the contract changes. So if when you're done and you've done this and you're pulling it down to like a daily, you've got to move your fibs, because then it's more reflective of the contract change within. So here you can see those kind of there. Here, I just have to move this up and that up, and it changes our upper levels a little bit. But we're going to see. Nope, but not that one. So this would be your procedure. You're going to pull that, activate. That's this one. And it's going to come up to there. And this one is going to come up to there. And this guy is going to come up to here. It anchors. It's real tough to pull that anchor. But I'm going to leave it right there for right now. All right, so then there's that. Now we have those changes, and that's for the minuet. And you can see right there, 31, 38, 31.40, 31, 3,140. And we just got up to, I think, 3,007 today. So I think we push up further up, and then we do a nice correction, come back, and we'll figure out those levels. But likely, I think it's going to come into here. If we're going to pull back in a minute wave 4, where's it going to find its support? It's going to find its support in the previous wave of previous fourth wave of a lesser degree, which is minuet. So we're looking for a pullback back down to here. The possibility here, we have that 26 area back in favor again of where it can come in. And then we'll build again to our next 4, and then a 5, a minute 5, and then we'll do the same exercise. So wherever this minute degree, right, when we finish 3, we get that 4, and then a 5. Well, then the minor degree would be, we would think is going to come back down to that minuet fourth, or the minute fourth. And that's how we're just going to keep those 4s and 5s going until we get to the end of our line here. So you can continue, you break it down to the 4-hour, and it depends on how strict you are, or what type of a trader in gold you are. I mean, if you're really a long-term trader, well, you're not really doing much, and maybe taking some profit if you roll money out of gold. If you say it's a 401k, or it's an IRA, and you're retired. So anyway, there are different reasons, but having gold in a portfolio is not a bad thing. In fact, it's actually a very good thing. So here we are again now in the 4-hour chart. We got the sub-minuet. Sub-minuet 1, 2, 3, 4. So the patterns repeat and repeat and repeat. They really do. And when you'll be able to work this. What we're seeing is, again, another extended third. So we are in a very, and here's another extended third. In fact, that one needs to go up here. And it's all just a matter of the contracts. And this guy, nope, needs to be brought up. Oh, dang it. I put it on there and I punched the wrong thing. I want to activate it because I want to move it. You put that up there. And then you put the 4. So building the charts is important, and it gives you a very clear picture. And then you can drop down and you can see Elliott in action. So not only is this a big and small picture, it's also kind of a little bit of an Elliott history. How do we apply Elliott? And you'll learn about third wave. You'll learn how expansive they can be. And then it's a 3 and a 4, and then we're looking for the 5. And boy, look at how nicely that's coming in. 1, 2, 3, 4, and we're going to do a 5. So these are important times as an Elliottician, as a student of Elliott, to use gold. And it's also a very important time to be trading gold. Gold is now in a very expansive part of this primary C wave, which is bullish in nature because it's going up. So the discussion could go to so many different levels, but I'm keeping it technical. The Elliott says we still have more room to the upside. There are specific reasons economically, there are specific reasons historically that continue to tell us that we still have upside in gold. And plus, every time we now go above, I guess, 3007, then we're making, again, new all-time highs in the price of gold, current day. And we can go all the way back to 1980. That was the current high. Then we had it in 2011. Now it's 2025. So we can space it out. We can see. We had 21 years. And then we probably had, you're probably looking, it goes like maybe 13. So we get these Fibonacci time cycles going between our wave patterns. So there's a lot of different things that can go with gold. And right now, my thoughts on gold are, I don't want to, if I bring it down here, it's going to get a little bit, well, it gets a little bit cleaner. We can see that what we're counting here is a sub minuet wave 5, which is breaking into its own 5. So we are close. We are close. And this is as funny as it is, this is the cycle degree. So you can see the height that we're getting to where cycle wave C would be equal to 3.618 times the length of cycle wave A at 3044. And it ain't going to stop there because you see we're still within the 3454545. Build, 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 build. So here we are, 1, 2, 3, 4, 5, and then we're going to get a 4, 5, and then we're getting a 4, it'll just continue to step ladder up. So, but this 5, 100% where wave 5 would be equal to wave 1 comes in at 3025.80. That, to me, is our first level that might finish us up to that. I got to pull this out, believe it or not. Let's go back to the 4 hour and see if I get it. Yeah, we're looking for the five, and here we're looking for a five. So if that's the four, and that's going to be the five, then I got to find this minuet. And that could go, but so we're above the 100, we're above 1.382. So yes, anywhere in this particular zone, I think we can complete. Now, we want to go one higher, believe it or not, to the daily, and because I want to see where we're finishing that minute three. I got to keep going out. Oh, that doesn't come till here. So anywhere up in here, as we begin to finish the five of the minuet, it's going to automatically complete. I'm going to go all the way back out. The third here. So we're getting to the minuet wave five when that is complete. So five up here completes. It'll finish five, and then it'll finish three. And we have a larger to bring us back into here. Then we'll go again. All right, let's go take a look at silver. And you can tell I'm kind of, I love talking Elliott. In silver, let me go back out 5 year. You're going to see where we are, but I'm going to go back out all the way. And it really is a pretty neat chart if you're a chartist. And they're pulling it into focus. We can see the highs. And this one I'm counting a little bit differently because most of the time, if you follow me and through what I'm trading and also analyzing the indexes, I actually don't normally use WXYZ. I stick to the ABC X ABC. And here I am using the WX and the Y because you can see them. You can see the W. You can see the X and you can see the Y because of it's a monthly chart, a multi-year monthly chart. So it's multi-decade monthly chart. And so it's I like it because it's clean and it's data. It's strong data that continues to suggest where we're going to end up in this Y wave as we're in the neck, right? We're in the neck of the Y that way, but it's reverse. So it's a Y going up, but it's still a Y. And where our projections are. So here, the largest I count is actually on the primary degree right now. I don't feel that I can get past that in terms of wave degrees. So you're going to find that they're going to be a little bit different, like an intermediate degree in our equity markets may not cover as much time or territory as an intermediate degree in silver. And so with that in mind, here we have, this is the high in 1980. It was $50.50. And here's the high in 2011. And it was, I think it was a little bit higher. Let me go right there. $49.82. So it missed getting to the high by 68 cents. So, but still. And then we come plummeting back down. And now we're in what I believe is a Y, WXY. Now, how I would likely count that, it's an ABC up. And there's the A and there's the B, and of course it's a zigzag. So we have one, I gotta change that color. So yep, that's there, but change this. See, this is part of my overhaul, making sure that whatever I'm connecting matches. So no, intermediate, yellow, intermediate. So where we can expect maybe to see intermediate wave C and then the Y would be over, that's a possibility, but I think we have a lot of potential to get up, to get high enough. And it will get very vertical. So if we're thinking about, again, what a Y looks like, now you're thinking about the move. It's going to get vertical. And I do think that'll happen. Now, that doesn't mean it's like you're going to buy it on Monday at $34 or $35 an ounce and think that by Friday we're going to be at 45. Could it happen? Of course it could happen, but I'm not expecting it. Why? Well, because the patterns take time to unfold. Yes, we have dynamic rallies in the precious metals, But in terms of getting to the levels that we're going to be talking about, it's going to take some time. In any case, here we are. So there's the A, the B, the C of our W, and then we have an ABC down, A, and this is the B, C of our X wave. And now we have an ABC up. Now, the intermediate degree C wave will consist of 5 waves of minor degree. Let's start going down. I'm going to go right here because this is what we want to look at. So there's the A, there's the B. We're in an intermediate C wave going up, 5 waves of minor degree, of which I believe we've had 1, 2, 3, and 4. So we're in minor wave 5 of intermediate wave C, of which should be then the Y wave, unless that Y wave does a WXYZ, or excuse me, an ABC X ABC to fulfill itself here. Now, so I want to go down because I want to take a look at we're inside that minor fifth wave, and it might have to switch. These might be primary, and these will be intermediate, working our way up to primary, but still the same type of a picture. But I think that the fifth wave, the reason why I'm doing this, is I think the fifth wave can be explosive. So anyway, here, let's just count it. We're just going to look to count 5 waves of minor degree, of which we have 1, 2, 3, and 4. Now here, 2, 3, 4, that's pretty clean. And that ABC is pretty clean. So yeah, I think we are. And then inside this minor wave 5, I think we're getting ready to put the high in for minute wave 3 of minor wave 5. So this is the other weekly. I'm going to bring it down now to the daily, the 5-year daily, and now we're up into here looking. And see if we can open this up a little bit so I can get a little bit more of a daily picture in there. So there is the 5, there's the 3, there's the 4. So now we're inside. We're inside this minor 5. We got 1, minute 1, and 2. Then we start to subdivide. And this was a very interesting pattern that I see more often in silver or in a precious metal, or I'm now seeing it in some of the indexes, where you get a 1 and then you get a big ABC, and that's a 2. And you're like, well, wait a minute, Michael, that's a spike high. Could this not be just 1, 2, 3? And I'm like, no, I don't think so. And I'll tell you, when I get stuck on stuff, I come down to the line chart. If your system has that, it gives you the choice of what style of it. Do you want a bar chart, a candle trend, Heikin-Ashi, line, etc. I go to the line chart because it's on a closed basis, and that's the one that Elliott actually did every day. He created a line chart. And by putting a dot, putting a pencil mark, every hour he would read the tape and find out where the index was being calculated. And he created charts. So today we do it electronically. Anyway, so here, when I'm looking here, so you can see you got 1. That one's a little bit weird, so I think it could be part of the C wave. It might come all the way over to here. And then we have 1, 2, and then 1 ABC. See? That is a 5. That is A, B, and a C. And then you get a C wave down. So best counted as an irregular B wave and not pushing this up because of how we had to start. So I take that back and I go back out and go to the bar chart. Actually, you also can use a candle chart. They're pretty clean on the candle as well. You see it was just a wick. And the actual bar closed down here in the next 2 bars. So these are really the highs. Or you could either say A, B, spike, and then 1, 2, 3, 4, 5 for C on the daily chart. So we have internal of the minute wave 3. We've got minuet 1, minuet 2, we're in minuet 3, which could be 1, 2, 3, 4, 5 wave 1, subminuet wave 1 of minuet 3. If it's really going to divide, you can see we start getting that vertical nature. So where can this go? 1, 2, 3. Well, the C wave, or this next wave, We have, if this is 1 and 2, our next layer is up here at 35. We've surpassed and now finding support around that 100% level, which is at 34.30, $35.30. The next level is at 35, almost 35.50, where that could possibly just finish 1, 2, and this is an internal 3. And then we get a 1, possibly, and then a small 2, and then we launch again. We have levels. We have pockets of levels. This is just where the primary degree would be 618 for the rally, for I guess it was going to be the C wave. And that's actually an intermediate degree. So not sure what that puppy is. But at 40, let me go up and find out. Hold on. Sorry about the delay. That's that. Gotta go all the way out there, see where my primaries are. Oh, it is going to be primary Y. So that's our first marker is 40. And I don't think so because you can see it's 618. And so I think that might find some resistance there. But here is where I think silver, in terms of the Y wave, if it goes 100%, we're at 57. So that is new all-time highs. And a Y wave can do it. A Y wave can certainly do that. But something's going to have to light. And it could just be the demand. The demand for silver gets really high. Because don't forget, you're getting a physical piece of silver. And so when you're buying it and you can take delivery of it, it's physical gold, it's physical silver. So again, when it gets short, because nobody wants to sell it, it gets squeezed. And it could go. And for sure it can go. And people that are short for too long get blown out pretty easily. So anyway, yeah, are these numbers possible? Sure, they are. Look at that one. That was the spike that took us up to 50 in 1980. This was the spike that took us up to almost that same level in 2011. Where would the spike come in 2025 or maybe 2026? This is 21 years. So 14 years would be 2025. And that's not necessarily a Fibonacci. Some people say close enough, but who knows? So could it reach up this year? I think we'll be hitting new highs this year within the sequence. Whether we're actually going to get above 50, we'll see. So there are possibilities. So again, bring it all the way down. We're inside the minute wave 3. And here we have the minuet wave 3, minuet wave 3. And these are our levels for that sub. 35.46 would be where wave 3 of it, or wave 1, 2, 3. Now 3 finished here, that's okay, because then this is like a 4. And it could be a 4 all the way down to there. That looks like an ABC, but if it comes further, then we're going to do a larger ABC down. And then we'll come back maybe to 33-ish or so, maybe even down to there. And then we still have another wave up. And then that one could definitely get us up to 35. So I do think that eventually, if we spike above 35, I think we can really just produce a little bit of a short covering and get up there. Now, the yellow, that is the intermediate degree, and I think we go beyond. So therefore, I pull it back out to the daily. I think we go beyond the 100%. And we start getting up into here. So all it does, again, remember, as we get up into these higher levels, and we're seeing 100% here, now we're realizing what the market can do. That's the resistance. If it breaks above it, doesn't mean it has to go to the next level, which I think on my chart would be 1.618. And here would be 0.786 or 100. So like here, you can see how I break it. And so we're looking for the minor 5. Could it go to 38? Sure. Yeah, that's kind of the expectation, that the minor 5 goes to 38 or even higher. That it can go up to 44 and then comes back down in a little bit larger correction. And if we're then combining it with gold, we'd be looking for like another like a 4. And so the same thing here. But I do think we can get up there. And there it is, 46, 40, almost 47. So again, you're back in the area of those highs, 50, 48, 82, 47, 46, 48, 49. And then we got the other levels. So we're looking at structure. It's where structure will complete. But I still see upside for silver as well. But keep in mind, we are reaching a period where we should begin to see a larger pullback. So that's going to be the interesting part. And now let's go over and take a look at platinum. And so I got to get it up there correctly. All right, and platinum, I'm going to pull it back out also and go to the largest chart I got to see everything. That's actually my 5-year, but I can do actually the monthly on this one as well. And you can see our largest picture, and here again is primary degree for platinum that I'm comfortable with, that I see the moves. And so that's a primary degree is the largest that I count for platinum right now. To finish the fifth wave here, so we're looking for, there is the primary wave A. So we're still within a primary cycle. And this is going to getting ready to, or it's within a primary B wave going up, which is going to consist of an intermediate A and B. And we're inside this B wave, which that larger on a minor degree is forming a diagonal. And then within it, on the minor degree, the wave E is forming a triangle. So this is going to be interesting to break down because it is unique Elliott here, because we have a triangle within a triangle. And normally you'll see it in a B wave. So that within the B wave, the E wave can break down into its own. So it's at the end. So, and then we'll get a C wave, an intermediate C wave up. And you can see those initial markers of where the possibilities are. Now the C wave, it would be equal 100%, will put platinum up at 1671. But these are longer term cycles, the price going. And there is pretty succinct seasonality in platinum, and it goes according to purchase. So users of platinum will usually come in between December and January on a seasonal basis to purchase their needs. They budget, and that's where they purchase futures that they can take delivery on in the future to fulfill their needs, so they know what they're going to be paying for the product. So, any case, the prices will rise, usually seasonally between those periods, and I'll show you how that's happened. So here we have an A, B, C, primary A. A, B, not yet in, so we're looking for the completion point of the minor wave E and the intermediate wave B. So let's bring it down, and let me take it to the 3-week. Yeah, it does show both, but I'll start here on the 5-year, and you can see A, B, C, D, and we're looking for that E wave. And you can see, I mean, this thing's been this has made not a fool, but this has just been fooling us for a while, because here's a nice ABC. Oh, there it is. There's the E wave. Look for that big thing. Get the rally, and it fails to break out of the top of the boundary. You're like, oh, okay. And then it goes all the way back down towards the bottom end of the boundary. You're like, okay, what's this? Is that now just expanded, ABC? And it's like, no, it turns into, it is in and of itself another triangle. And right now, the E wave is also breaking into an ABC, as they all will. They're all threes. So now I believe we have one more turn down to put in another low, and it likely will coincide when, it doesn't have to. I've seen them go independent of each other between gold and platinum. But if gold starts to correct, platinum normally will start to follow. And so, but I think I have the 924. There's one level where I'm thinking, yep, that would be a good one for this to kind of turn and come back down to. And then I have the 100%, I believe, at 902. So again, we have a range to the downside. It continues to narrow inside of the larger, the B wave, and now the E wave has some boundaries as well. So I think that once we get that done, then we will go back into a rally in platinum now. But the balance of this E wave and popping out of the E wave could take 6 months, 7 months. Platinum is never really in a rush just to reveal its hand. So if you're trading it on a smaller time frame basis, you're running into this, where you get these magnificent rallies in platinum, and they're tradable, but you just have to be ready because that's when they don't want it, or there's a particular reason that they're going to start to sell it, then it really comes through. And I don't know the per dollar value of or per tick value in platinum. So, but I know gold is $10. Now each dollar tick is $10 in value. In any case, there's the A, there's the B, and if it's complete, I don't know. I just threw it up there, and because for all I know, this was a full, and it was the ABC down. That's the E, and I have to bring this all the way up. I don't think so, and then it comes back down. So I think it rises up with gold, but then eventually it will turn and start to come back down again. And then get some help because I think gold is getting ready to put in a little bit larger of a pullback as well. So all the markets, all of they really are following pretty clean Elliott. And so here's our picture. And I know I've been talking for a while, so I am going to wrap it up. And as I keep saying, that my goal is to continue these and to continue to produce them a little bit more frequently. But time is, of course, of the essence, and so many other things kind of come in and interfere. But I will continue to post, and I thank you for spending some time with me.